Welcome, ladies and gentlemen, to speak in the spotlight today. We've got Adam Linton, head of the EU desk over at Newsquawk. Very happy to have him here with me today. And to kick things off, we're going to get a little background on Adam and find out how he got into the saucy world of finance and trading. So Adam, I'm going to hand it over to you. Take it away.
Nice one. Thanks for the introduction. So I'm Adam Linton. I'm on desk over at Newsquawk. And just in terms of Newsquawk, so we are an audio feed, and basically we kind of provide live commentary for traders on various asset classes. We also kind of give our market commentary and basically try to piece everything together for our clients. We supplement that with the headline feeds and carry out various research reports to basically kind of keep our clients as brief as they can be at all times throughout the trading session. So just in terms of a bit of my career path, so I've been working in financial markets about 8 or 9 years now. So I left university, armed my economics degree, and did briefly flirt with the idea of being a trader, but ultimately kind of ended up going down more the analyst route. I thought it was a bit of a safer option for my bank balance and the career prospects. And then, so I applied for a job at Ransquawk, who are also a Squawk provider. I started working there at 2013. And basically kind of started at the bottom of the desk there. It was a pretty intense working environment. It's one of those ones where you're kind of thrown in at the deep end straight away. So I kind of started off kind of writing more smaller, topical kind of flash commentary. And that kind of then broadened onto like bigger, like more macro commentary and other research reports. Then the aim of the prize there, the aim of the game rather, was to kind of fill that Squawk seat. So that's kind of provide that live commentary, which is kind of a bit of I found that a little bit more of a step up from kind of the written word. You have to kind of think a lot more on your feet. So if the market starts moving, you kind of need to have a clear and coherent answers to what's going on, because, you know, if people are paying for you for this service, they kind of always want to have an argument or like a reason for something happening. And sometimes, obviously, there's not always a reason for something happening. I think often that's kind of one thing you need to bear in mind, but obviously you need to kind of do your due diligence to make sure that's the case. So yeah, I head up the analyst team over here, and I'm doing it for a little while now. And it's good fun.
Well, that's an interesting path you've taken and thrown in the deep end there in terms of at Groundsquawk and having to get into the markets very quickly. No room for mistakes there. Adam, obviously something, you've been in markets for a long time. So what's some advice you could give to a new trade or something that you might have done slightly different if you could go back in time?
Yeah, I think the thing that I didn't kind of really realize when I started, I mean, it's kind of obvious, is that, financial markets are 24 hours a day. I mean, even if your respective market isn't necessarily open, there will be a market open somewhere, which can always have a knock-on effect for your market. So I think, if you're going to get into financial markets and kind of, really want to get into it as much as possible, you kind of need to realize it's not necessarily a 9-to-5 job. You kind of really need to kind of have a bearing of what's going on all the time, so that when you arrive in the office the next day, you're not really arriving in cold. When I kind of get in, I kind of have a vague idea of pretty much most things that have happened. I'll then have a handover from our overnight team, and I'll kind of just be kind of finalizing some of the details that I already know. I think when you start out, you're going to be working with people, some of which are going to know a lot more than you know. I think you kind of really need to focus on narrowing that kind of knowledge gap between you and everyone else. And therefore, I think you need to kind of really like throw yourself into it and get as much out of it as you can. I think you need to ask as many questions as possible, as long as, you've kind of done some work yourself to kind of try gauge the answer to something. I think, asking a lot of questions is helpful. I'm also a huge note taker. I think I keep the local stationery shop in business with my notepads that I buy. I always have one next to me. Even now, when I get in the morning, I'll write what are some of the key levels that I'm looking out for today? What are the big releases? Kind of why did the moves in the market happen yesterday? What are kind of the big broad factors driving the market? And it kind of gives me a good grounding for the day. And then I think also you kind of just reflect on that kind of when you leave, just to kind of try piece it all together. I think it's easy to kind of like navigate, it's a move in like say euro dollar or kind of why the 10-year yields pull back a touch. I think you really need to become a good analyst. You need to kind of piece it all together and be able to kind of develop that broader narrative.
Yeah, there's lots of different moving parts that as analysts have to keep abreast of, and I totally agree. You don't want to arrive cold, and especially in this current market backdrop where things are moving so quickly, you kind of don't want to be doing your research mid the price move. You want to know those factors, and that I think keeps you in a better emotional state. Adam, lastly, we're going to finish off. You're going to give us a very brief summary on the ECB and your thoughts around that. The June meeting looks like it's going to be quite a big one, with all the talk now looking likely like July is going to be lift off for a rate hike. So just give us a quick overview of that.
Yeah, so obviously this year was always kind of going to want to be of normalization to some extent for the ECB. We're always going to see the pandemic emergency support unwound. Then APP was kind of going to be lowered throughout the year. Obviously, the big macro story has been the Russian invasion of Ukraine, which kind of had the twin effects of darkening the growth outlook whilst further fanning the flames of inflation. So as such, we kind of need to see a bit of an unwind of that stimulus. So first up, we can have the APP, that's the Conventional Asset Purchase Programme. That's going to be unwound. I think it's pretty clear from what we've seen this week that July 1st is very much the go date for that. Then thereafter, obviously, we're going to be looking out for rate hikes. The current sequencing suggests that rate hikes won't take place until asset purchase has been unwound. I don't see the ECB breaking that guidance and moving early in June. I think I would kind of lend too much in the way of credibility issues going forward. So if July 1st kind of marks the date where asset purchases are halted, then I think that it's pretty clear that the next rate hike will be on July 21st. We've seen a lot of ECB speakers kind of suggest that'll be the case. I mean, Lagarde didn't explicitly say it this week. She never kind of explicitly does, but I think the fact that she hasn't really got in the way of that kind of market pricing and those comments tells you everything you need to know. In terms of what lies ahead thereafter, we've got rate hikes priced in for September and December. I don't think we'll get too much in the way of clues into June as to whether that or not will be likely. I think a lot of people now are talking about a window for the ECB to hike. So I think as we kind of get into Q3 and Q4 and some of those like negative growth headwinds kind of come to play, we might see a bit of a revision to that market pricing that we've got at the moment. But I don't think that's necessarily going to be a story for June. So bottom line, asset purchases, they're set to be unwound and then get that rate hike for the deposit rate by 25 basis points at the July meeting.
Yeah, I think it's going to be quite a tight timeline. We obviously, as you said, Lagarde didn't specify, but she said end APP in early Q3, and then some weeks thereafter we would probably hike rates. So if they end 1st of July APP, as you said, and they hike on the 21st of July, do you think that's a realistic timeline for markets to absorb? Do you think that'll happen?
Yeah, I think so. I mean, I think the ECB have been pretty clear that these aren't, this isn't really beginning of a tightening cycle. It's just more of a normalization of policy. I think from a rate perspective, we're still going to be in negative interest rate policy, even if you do get 25 basis points. We get another one in September with flat at zero. I think if you look at what other G10 central banks are doing in typical ECB fashion, they're kind of lower than most other people and kind of slower to start. So I think the market's very much expecting this. And if you look at gyrations in FX space, I mean, even though we've kind of seen this hawkish pivot from the ECB, it's been one-way traffic for the euro. I mean, euro dollar today, they've just been getting absolutely crushed. It's below 104.
Speaking of the euro US dollar,
this call, it's even lower.
Parity is obviously the new buzz term for the euro US dollar. Very quickly, what do you think that's a realistic outcome? Do you think we could get down to parity?
Yeah, I mean, I think that's more plausible than a move upwards. I think in order for there to be an upward move, I think you kind of need the Fed to kind of pull back on some of the current market pricing. I don't really see that happening at all. And I think you kind of need to see a more aggressive ECB, but I think that's kind of too linked to events in Ukraine and Russia. I think as long as that's unresolved and there's all the issues surrounding energy security for the Eurozone, I just don't really see that happening. And like I said, even though we've seen a slightly more hawkish ECB since about April, it's not done any favours for the euro, and it's just been one-way traffic since. I'm not really seeing anything that can kind of stop that. I think if you look at the broader risk dynamics in the market as well, it's very much a kind of flight to quality, and I'm not too sure the euro really fits into that bracket. I think the dollar's going to continue to steamroll it.
Adam, thanks so much. That's been really insightful, and looking forward to the more comprehensive presentation at Pepperstone Talks. Thanks for joining us today. I really appreciate it.